up here and we can quickly get going. So Mason, can you see my PowerPoint? I'm going to assume that everyone can see my PowerPoint at the moment. So as we all know, the federal government has addressed the—
Paul, yeah. I'm so sorry about that. We're unable to see your screen share right now.
Okay.
There you go.
Great. Thank you. Sorry about that, everyone. So as everyone I think is aware, the federal government has undertaken a massive effort to address the COVID-19 virus. They've done a stimulus package that has actually come in 3 phases. The first phase was a spread of money around the federal government to help the government prepare for the spread of the virus and make sure that various governmental agencies were able to appropriately respond as the coronavirus came to our shores. The second phase dealt with the workplace and the idea that we didn't want folks having to feel compelled to come to work because they were going to miss a paycheck and therefore spreading the disease to the extent that they were infected. The final phase, the most recent one, which was passed about 11 days ago, was phase 3, known as the CARES Act. And that was a $2 trillion injection of money throughout the federal government, but then more importantly, into the economy as a whole. So these 3 efforts have provided some opportunities and some burdens on us as the virus is being addressed. I quickly want to touch on the town of Fairplay really quickly. The CARES Act provides $150 billion to local governments throughout the country, as well as states. Colorado, it's anticipated, will receive about $2.2 billion worth of that money. But there's a catch within all that, and the definition of a local government in the CARES Act is a community with over 500,000 people. So that means that Denver, as well as the counties of Jefferson, Arapahoe, Adams, and El Paso will all receive money directly from the federal government. The rest of that money is going to go to the state of Colorado, and there's nothing within the CARES legislation that says that the state has to give money to local governments. Now, I can't speak for the Polis administration, and I understand that there is ongoing discussion by folks at the local level with the state to figure out how that money can trickle down to the local government. But again, there's no guarantee that the town of Fairplay is ever going to see any of that money. There has been some effort to get new legislation introduced, and as of yesterday, that legislation was going to come in the form of a 4th stimulus. But this morning, we learned that Representative Neguse in the neighboring congressional district just introduced a bill for $250 billion for local government aid. So that doesn't mean that that bill is going to pass, but there at least is an effort in Congress to get some money to the town. But as of now, the town cannot count on any federal monies coming to us, and they can't count on the state to backfill it because the state, frankly, does have its own COVID-related needs that needs to address. So moving on from the government, one of the things that the phase 2 legislation did was address the workplace. And as I said, the idea was that we didn't want people coming to work and infecting their coworkers and therefore spreading the disease faster and more efficiently. So there are 2 main provisions called Emergency Family Medical Leave Act and the Emergency Paid Leave Act, both of which are included in what we call FCRA, the Family First Coronavirus Recovery Act. And FCRA set out these 2 new policies, and they apply to employers with fewer than 500 employees. There is a small business exception that we'll talk about, but as a general matter, this is going to apply to every small business within Fairplay and the rest of the country. I think everyone is generally familiar with the concept of FMLA. It provides you to leave your job, typically unpaid, for a period of time. But what FCRA does is create a new category of Family Medical Leave Act eligibility, and it allows an employee to take up to 12 weeks of paid leave, as opposed to unpaid leave, for paid leave if their child is home due to a closure of their school related to COVID-19. So every school in the state right now, every public school in the state is closed at the moment. So every parent who's an employee who is the only person who can take care of that child is going to be entitled to take this leave. Now, the leave isn't full pay, it's at 2/3 pay. And the first 10 days are off, but you can substitute those 10 days and backfill them with your own PTO or the emergency paid leave that we're going to talk about. So again, this only applies if you have a child at home who is there because their school is closed. Now, the Treasury Department has issued some regulations that have indicated that if your child is 14 and over, you're not entitled to this leave. The high school kids apparently can take care of themselves. But that is a new leave that is available to everybody. Second, yep.
I'm sorry, Paul. We just keep getting some attendees popping in, so I wanted just to say again, if you do have a question, please hit the question and answer button at the bottom of your screen, or button at the bottom of your screen, and type in a question whenever you need to, or you think of one. We'll get to the questions throughout and at the end of the presentation. But since a lot of people are hopping in, I just wanted to reiterate that. Sorry, Paul.
Yeah, and Mason, if you could pop in with those questions when you feel appropriate. I can't see them on my screen, so that would be really helpful.
Okay.
I should also just take this break to caveat everything I'm saying. This legislation, all of it, has been subject to, or has had delegated to it discretion to the Treasury Department and to the Department of Labor, the ability to interpret this legislation. And so both the Treasury and the Department of Labor have been rapidly providing guidance that has, in some instances, significantly changed the meaning of legislation. For instance, 10 years suddenly becomes 2 years. So all of what I'm saying today is accurate as of 2/11 today, but honestly, I can't speak as to what will be accurate tomorrow, but the general principles apply. So we left off with the Family Medical Leave Act, and now you have a paid leave if your kids are at home. In addition, there's a new leave provision that is specific to COVID-related illnesses called emergency paid leave. It provides 80 hours of paid leave for folks who fall into one of two categories, and I like to think of those categories as caring for yourself or caring for a loved one. And so if you fall into those first three categories, which are caring for yourself, you are entitled up to you're entitled to your regular rate of pay up to $511 for 80 hours, so essentially 2 weeks of leave. If you're caring for somebody who is sick or is under quarantine, you are entitled to your regular rate of pay up to $200 a day. And again, this is meant to keep workers out of the workplace or prevent people from continuing to spread the disease. But this is new leave that is separate from the leave that your employer or as an employee that you receive already, and that's already on the books. Two other things quickly about the paid leaves. This seems like a huge burden on employers, and initially it is, because if you have employees going out, you are mandated to pay these benefits. But the federal government recognizes that burden and therefore is providing a tax credit that will be applied immediately to your Q1 taxes. And it will basically offset the cost of all that. And if you have revenue that doesn't meet up with the obligations that you've paid out over that last quarter, then there will be a direct payment to you. And my understanding is that that payment isn't going to be immediate, but it will be in your bank account by the end of the year.
Hey, Paul,
Yep.
Quick question related to that. We had somebody who is anonymous ask, please cover the genuine stimulus efforts related to people that are on social benefits. If someone receives TANF, SNAP, et cetera, how will they receive their stimulus checks?
Yeah, that's a really good question. So those folks, it was originally thought that in order to receive the direct payments, and we'll get to this in a minute, but in order to receive direct payments from the federal government that are coming, it was thought that you would have to file a tax return. That is no longer the case. And that's, the Treasury has made that clear that is no longer the case. I'm not sure what the exact mechanism is going to be. And Mason, if you want to ask that person to provide you a contact information anonymously, I will get an answer to exactly how that's going to work to the extent that that's been determined. But I can't affirmatively say that it is no longer a requirement that a person has filed their tax return in order to receive that direct pay benefit.
Thanks for answering that, Paul. Hey, I will certainly try and get contact information. I just want to also let you know Brian Baumgartner had sent a message that just said, when you describe supports for small businesses, and I think he means throughout the presentation, could you be clear regarding sole proprietorship, independent contractors, versus larger, brick and mortar businesses or things like that?
Yeah, so as I said before, these employment provisions apply to employers who have 500 or fewer employees. So none of this applies to independent contractors, but when we're talking about some of the other loan programs, that is an important distinction that I will discuss. So somewhat along the lines of Mason's question, although not entirely, so we have these paid leaves that have come into play, and so those are efforts that are intended to keep people out of the workplace, keep everybody healthy. But then let's think about, okay, that was a couple weeks ago. COVID-19 has now come into our community, and we're all now subject to stay-at-home orders. And as we all know, businesses are having to shut their doors, and if not go into quote-unquote hibernation, some businesses are starting to fail. And in response to that, both businesses that are hibernating and failing have had to lay people off. So in order to address that reality, I think it's important to remember that under Colorado law, anybody who's laid off is entitled to about 55% of their salary, and it's capped at the cap is a little weird. It's generally at $561. There might be a little bit of a higher cap if you can qualify for a different calculation, but just about everybody is going to be capped at $561 a week. The CARES Act goes ahead and lays an extra $600 per week on top of that payment that the state will make. And that $600 will be available through July 31st to everybody who is unemployed. And the important thing to remember about that unemployment, not only the $600, but the Colorado unemployment eligibility, is that eligibility has been expanded to not only include people who are traditionally employed by employers, but independent contractors, people who are self-employed, and people with limited work history, people who are in the gig economy. Those people are now eligible for unemployment benefits. And they, before last month, they were not eligible for those benefits. My understanding is that the Colorado website currently doesn't accommodate applications for gig workers or independent contractors, but that should be up and running by April 10th. And so people should look for that to the extent that they fall into that category. And so the CARES Act has really gone to make an effort to make sure that people will be able to get through until at least July 31st. The catch to that, however, is that the systems, both nationally and in Colorado, have been overwhelmed. I think many people saw that last week, 6 million people across the country filed for unemployment insurance. And so it's taking a long time for the states to process those applications. My understanding in Colorado is that if you file for unemployment, you can put in your application, but then they want you to actually engage with them on alphabetical level. So W is my last name, is just for example. I would have to contact the office on a Friday. And there are specific instructions on the website, but that all results in a check not actually showing up to your door until about 6 weeks after you've applied for unemployment. So it's important to keep that in mind, that just because you filled out the application doesn't mean that you're going to get money. Now, you will be backfilled in terms of the money that you're owed from the time of your application, but there is going to be a lag between the application and actually money in the bank account.
Hey, Paul, just real quick. A couple of things. So first, thank you guys for the questions. We have several coming in so far, and keep them coming by hitting the question and answer button at the bottom of your screen. Jay Maltzman sent in a question a few minutes ago about how does the 80-hour work week, or how does the 80 hours work for someone who might only work 10 hours per week? And I believe this was in relation to some of the material you already covered. Jay Maltzman, if I am incorrect in that, please retype your question, and I'm happy to re-ask it for you. Additionally, I just want to make a blanket statement I forgot to make at the beginning. We are recording this, and we will put it on our Town of Fairplay website. We will also, Paul, if it's all right with you, share the presentation materials as well. And so I've had a number of people ask me to email them a copy of the handouts. If you would like me to provide you additional information, if you could please email me at mgreen, just like the color, at fairplayco.us. My email is also listed in the invite. I just am afraid that I'm not going to be able to keep track of the various email addresses, and I would be appreciative of you guys helping me out and emailing directly or looking for those materials on the website. And then Paul, I'm sorry, just to go back to Jay Maltzman and his question, that was what he was asking in relation to your previous material. So again, that's how does the 80 hours work for someone who may only work 10 hours per week?
Yeah, Jay, that's a really good question. So good that the Department of Labor is trying to get their arms around that. There was what they call an FAQ that was issued by the Department of Labor on March 27th, I believe. And that FAQ addressed this in somewhat of a nebulous way and didn't really answer the question, but as best folks can understand it, the calculation is basically based on your recent work history. There's a proportional reduction in the amount of time you can have off. So if you go up to a 40-hour work week and that entitles you to 80 hours, then you just simply calculate based on a part-time work schedule, okay, what is the ratio of my time versus a 40-hour work week versus that 80 hours. So if I worked 20 hours, I'd be entitled to 40 hours of time off. But the idea really is that you want to be able to be off for 2 weeks to meet the CDC guidelines. But Jay, I would, you can feel free to reach out to me as it becomes more relevant. But I also would kind of hop online and just type in part-time emergency paid leave because those guidelines are changing, and my answer today might not be what is reality tomorrow. Okay, so I think I've given my spiel about unemployment. Do be aware that it is going to take a while for that check to show up. And so unemployment is one mechanism by which people are going to be sustained while businesses are closed. But the federal government has made the policy determination that they don't necessarily want to see doors shuttering or having people be laid off, that there's another way in order to get people through this. And they've decided that mechanism is going to be through a new program called the Payroll Protection Program. And through the PPP, small businesses are going to be able to keep on paying employees so long as they go ahead and apply. Now, the PPP is going to be a loan program, but it's not a loan from the federal government. It's simply guaranteed by the federal government. This is going to be a loan that comes from your bank. And just before I go and explain the program in full, I just want everyone to understand that this is a program that was launched really on Friday. Bank of America was the first bank to launch the program. Their site promptly crashed because there were so many people who were interested in the program. Other banks rolled out the program over the weekend, and some other banks are still trying to get comfortable with it and are doing so today and tomorrow. But one of the concerns is banks don't want to be lending to people that they don't have a relationship with because they have a significant fear of fraud. And so a lot of banks are adopting the posture that they are only going to lend to people with whom they've had a previous relationship. So as an employer, you should go to the bank with whom you have a relationship with because it is possible that a new bank is going to simply say that they're not able to provide you a loan. So
and
these
Paul,
loans,
I'm sorry. I just want to step in here and say that TBK Bank is working with some individuals regarding elements of the loan program. If you guys are looking to speak with TBK, if you bank there, Jennifer is the person to contact, and I'm certain that you could get to her by calling their phone number. So apologies, Paul.
Nope, you're good, Mason. And I would just say one thing about the banks. This is not 2009 where the banks are the bad guys and cause the financial collapse. This time around, the banks are actually doing everyone a favor. They're not making much, if any, money on this, and they're simply a pass-through organization. So thanks to Jennifer for making herself available and to her bank for participating in the program. So the program itself will provide employers with 500 or fewer employees with a loan that is equal to the amount of 2.5 times their payroll costs. So the idea is that we want to use this money to have people paying their employees. So if you think about your payroll, and that could be an expansive definition of salaries, compensation through tips. It also includes paid time off and health insurance. So all those things get rolled into your payroll costs. And then you multiply that by 2.5 and you get a loan. Those loans can then be used for things like payroll, interest rate payments on mortgages, payments of rent, and payments for utilities. So kind of all your fixed costs that you would have to just barely stay open. Not to have any inventory come in, but just kind of the basic necessities to run a business. But there's no requirement that your business stay open, because obviously with a stay-at-home order, that's not possible. But the idea is that you want to be able to pay your employees, your landlord, and your electric company. Now, one important development with this program has been that the Treasury Department has said that 75% of your loan has to go to payroll. The other 25% can go to those other costs, such as mortgage, rent, or utilities. Now, the best part about this program is that once you get the money from your bank, you have 8 weeks to make payroll. And during those 8 weeks, every payment that you make on payroll is forgiven. And so that means you owe no money back to the bank if that's what you're spending your money on. Now, if you're spending your money on other items that fall outside the program, then you are going to be subject to repayment, and you'll have 2 years now instead of 10 originally. Now you have 2 years to repay that loan at a rate of 1%. But really, the great thing about this loan is obviously the forgiveness, and I can't emphasize the following enough. The forgiveness starts on the date that your loan is provided to you. So you can't depend on, say, hiring employees today and start paying them and then getting your loan in 4 weeks, because that 4-week interval is not going to be forgiven. They're measuring it from the day that you receive funds from your bank. And I think it's just really important that everyone remembers that. Speaking of rehiring employees, part of this program is meant to encourage people to rehire employees. So if you've laid people off, there's a calculation in the payroll that gets a little odd in that you've hired people, so your payroll dips. And so theoretically, you wouldn't be able to get as much of a loan. But that calculation and other forgiveness requirements all get waived with respect to rehired employees. So if you've laid people off, this program is available to pay those folks.
So Paul, just to step in again, I do see your question, Jerry. I think Kristen asked another question that meshes nicely with what Paul was talking about, so I'm going to ask that first. Kristen says, I'm an employer and I have laid off all of our staff due to inability to sustain enough business for employees to be present. Can the PPP loan be used retroactively for employees who were laid off initially?
Yeah, so if you've laid off people since February 15th, no one before February 15th, but since then, you can rehire those folks. And again, from the day of the loan, you can start paying them again and have that loan forgiven. I'm going to say something, and I really want people to take it with the grain of salt that I'm going to less than 50,000 who do not have huge healthcare costs. Some folks might actually be better off being unemployed rather than being on payroll. And that's just something to think about going forward. I think obviously people would prefer to be employed. I think employers would rather have people around and on the payroll to keep that relationship. But that is a calculation people should think of. But again, with the caveat that if I'm the sole breadwinner of a family of 4 and I depend on the healthcare benefits that my employer provides, then that unemployment calculation doesn't work out at all, because the unemployment cost or the cost of health insurance on unemployment is fairly astronomical in that situation. But if I'm 21 and single, that healthcare cost is a lot smaller, and so that calculation becomes a little bit easier. But that is just something I want to throw out there for people to think about. Not encouraging anyone to do one thing or the other.
Paul, I just want to go back to Jerry's question, if now is a good time.
Yep.
Jerry asked, how do they handle income calculation for unemployment for self-employed commission-based individuals?
That is a good question. And I have not run through, I just have to be honest and say, I have not run through the Colorado unemployment website to figure out how that works through the state. You will get the $600 from the federal government regardless. Then the question is how the state will calculate your pay. And my advice, and it's very basic advice, would just be have all of your pay evidence of compensation available when you apply. And I think at this point the unemployment office is doing their best to get everybody all the money they possibly can. But I apologize, Jerry, that I don't know the answer to that right now. One last note on the PPP, and this is the distinction that someone asked me to bring up earlier. So employers who have fewer than 500 employees qualify as a small business. Independent contractors, people who are 1099s, they actually also apply as they also qualify as a small business. So if I'm an employer with 1099 folks, I don't count them into my payroll costs because those people can apply directly for a PPP loan and be compensated for the next 8 weeks based on the payroll that they bring in for themselves. So that's independent contractors, as sole proprietors, and individuals. They should all be applying for the program on their own and not rely on the folks for whom they do work. So
hey, Paul, sorry again.
That's good.
Boy, it's fun cutting you off. Hey, some questions from Mark Delcetti that he emailed to me initially. I think they fit in here pretty well. The first one was, would myself and my employee be eligible to collect unemployment and still work a few hours a week?
Yeah, so there's two ways that can work. One, there's a work share program, and I'm not quite sure how your business would fit into it without knowing more details, but Colorado has a work share program that they've established, and it would provide for a reduction in work hours and allow an employee to remain on the payroll and collect. The caveat being that, let's say I currently work 40 hours a week, my employer can't sustain that. You can lower that to say 20 hours, and the work share program will allow the state to fill in with unemployment insurance those 20 hours. Now those full 20 hours aren't going to be paid at the full rate. They're going to be at the cap of $561 an hour. Excuse me, it's been a long week. $561 a week. But they will still be paid their regular rate of pay for the other 20 hours. Now, from the employer's perspective, they still need to provide the benefits that they're providing when that employee entered the program. So that means that any health insurance or paid time off, they still need to provide that. So the question for the employer is whether or not it's really a cost-effective savings for them. It certainly might be. So that's one mechanism in which you can reduce hours and continue working. Another mechanism is if you are unemployed, you do have the ability to work part-time up to 32 hours a week. At a certain level, there will be a deduction in the amount of benefits you receive from unemployment versus what you're taking in on that part-time employment. The caveat, I think, to that, given the situation that you just described, you can't keep working for your own company in that scenario because technically you would have been reoffered your job. So I think that the real solution from what the question you asked is to look at that work share program.
Paul, I just want to touch on the other two questions this gentleman asked. The first was, I've applied for an EIDL. What is a realistic time frame I should expect to hear back from someone? Should I be contacting them? Yeah, and then additionally, I'm sorry, the last question is, can I apply for more than one forgivable disaster loan?
Good questions, all. So your EIDL loan goes through the Small Business Administration. Unlike the PPP loans, which go directly to the bank, EIDL loans go to the SBA. And theoretically, those loans are supposed to be processed very quickly, as in 3 days quickly. I imagine that there's an overload on the system at the moment, but that's the way it's supposed to work. So if you haven't heard back from people in about a week, I would ping them immediately and say, hey, where is my application? What's happened to it? With respect to EIDL loans, you can get more than one, provided that those loans are being used for different purposes. And I think maybe there's a good opportunity to talk about EIDL loans, and then maybe I can further answer that question. For those of you that do not know, an economic injury disaster loan is a program that pre-existed the COVID crisis, but has been expanded and reinfused with cash. And it's a loan that can be up to $2 million for a small business. Again, 500 or fewer employees is typically the threshold, though there's exceptions to that. And it helps you overcome lost revenue. And it's been well documented that the COVID crisis qualifies you for that loan, so that's not even a question. It can be used for the same reasons as a PPP loan, but in addition, it can be used for other fixed costs. The thing that pops up in my mind most frequently would be inventory. So for folks who do have inventory payments that they need to be making, that's something that you can use an EIDL loan for that you cannot use a PPP loan for. These loans, generally speaking, are not forgivable. They're a 30-year loan, and for businesses, it's a 3.75% interest rate, and for nonprofits, it's a 2.75% interest rate. And speaking of nonprofits, I should back up and say nonprofits are available for both PPP loans and EIDL loans. So any nonprofits out there need to be looking, especially at PPP loans at the moment, to get them and their employees through. Now, I said that EIDL loans are not forgivable. That is largely true. Under the CARES Act, there is a new subset of EIDL loans, which is a $10,000 grant. So if you qualify for an EIDL loan, you would qualify for an EIDL grant, and that's $10,000 that's just going to be forgiven once you receive it. No questions asked, basically, unless you're committing some major frauds. We're going to assume no one here is. So then that gets me back to the question of what can I use? Can I do more than one loan? Yeah, you can. You can't use one EIDL loan to then pay for the same purpose that you got another one. Similarly, if you get a EIDL loan, you can't make payroll for March and then use a PPP loan for payroll for March. Those are gonna have to be separate payments, but generally you should be able to qualify as long as you have separate purposes. So kind of going back to the first question that we had, I think this is important for people, especially in government, to remember as they're thinking about how they're going to support their community. There is a $1,200 infusion of cash coming to most residents within Fairplay, and that infusion of cash is going to be for people who are making $75,000 if they're individuals, $150,000 if they are a married couple, plus $500 for each kid. Those amounts phase out at about $100,000 for individuals and $200,000 for couples. But a lot of folks should be expecting those checks. The original plan was that those checks were going to be coming next week. It looks like that hasn't quite worked out, and there might be some people who don't receive their checks till closer towards the end of the year. Hopefully that problem gets rectified, but people are going to be receiving direct payment checks in order to cushion the enormous blow that this crisis has dealt just about everybody. So that is a really broad overview of the policies that have been put in place that can directly affect Fairplay. There are a lot of other things that have been happening, obviously, but I think those are the things that are most relevant. Again, there are employers out there who are going to have some significant obligations with respect to their employees, but they're going to be able to recoup those obligations. If you're an employee, unemployment insurance and the direct pay are going to be sources of aid for you, but there are a lot of other resources out there. And then for the town itself, while I'm sure that they would love to just throw a ton of money your way, they don't have an infusion of cash coming to them anytime soon. So it's going to be hard for them to do anything on a huge scale. But Mason, do we have other questions?
No, we don't have any questions at this time, but again, please feel free to ask them using the question and answer button at the bottom of your page. We've got some really good questions so far, and our goal is always to stump Paul. Oh, I lied to you. We do have more questions. Let's see. So one of them is, I think may have already been touched on a little bit, but how does a stay-at-home order affect the emergency paid leave? And I think that answer was going back to if your kid's at home, you can qualify for that, but I was wondering if you could elaborate a little bit more if needed.
Yeah, so we're all obviously subject to the stay home rule. And one thing about the emergency paid leave and FMLA is it's not just if you're at home, because we all are at the moment. It's if you're at home, unable to do your job and unable to do your job via telecommunication. And so just because we are under a stay-at-home order doesn't mean that we are subject or able to access emergency paid leave. But the Department of Revenue on Friday made it clear that stay-at-home orders are a reason on that list of reasons that I showed you for people to be eligible for both family leave, or I'm sorry, to be eligible for emergency paid leave. So if you're at a stay-at-home order and you cannot do your job from home and you cannot do it via telework, then it is likely that you're eligible for paid leave.
Thanks, Paul. Another question would be, how soon should I file for unemployment?
As I mentioned before, I would do that as quickly as possible once you realize that you're being separated from your job. Again, there's a backlog at the state office and it is not getting shorter, unfortunately. So the quicker you're able to get in there, the better. I think that's the easiest answer. I should also note that the $600 from the federal government, that is being processed through the state. So there's not a separate application that you need to do. Once you file with the state, you file with the federal government as well.
Hey, Paul, we had two more questions come in, and I believe it's from the same individual. So if not, I apologize. But I'm going to ask you both of them. The first question is the direct pay for individuals, $1,200, or couples, $2,400. How is that going to be paid back? And then actually, I lied to you. Let's just go one at a time here.
So it's not being paid back. It is a just direct payment from the federal government to America. And I think if the question is how is it being paid for by the federal government, I think the answer is deficit spending. But there's no obligation to repay that. I believe during the 2007 to 2009 crisis, there was a program by which you could take a payment from the federal government and then have 5 years to repay it. And that is not the case with this payment. It is simply just money into your bank account for you to spend.
Thank you, Paul. So I did get a slew of questions in here, and I'm going to try and ask them in an order that makes the most sense, so please bear with me. The next question I think is kind of a standalone. It's from the same individual, I believe, who asks, what happens if your income is a combination of W-2 and 1099?
For unemployment purposes, that's a good question. I would go ahead and file via your W-2 if that's the reason that you've been separated from your unemployment. I think that's the question that's being asked. And so I would go ahead and you can get on the website right now and file. I think at some point you're going to have to talk to somebody at the unemployment office and make that clear that there's another mechanism by which you've had some income. I'm not encouraging anybody to lie, but it does strike me that if they don't know that, there's tax advantages to that, I suppose. But I think you do want them to know that you do have that 1099 income because that means you're going to get higher benefits. So I would file the W-2 first, at least get in the pipeline, and then talk to whoever you need to once they start processing your application.
Great. Thanks, Paul. So Amy Flint asked earlier a little bit, how are the infusion payments expected to be paid? Bank accounts or checks directly?
That's a good question. I believe that they're going to be coming in the mail. And that is my understanding based on that's my understanding based on regulation that I read where it referenced mail, but that is not entirely clear. I suppose it is possible that if you had a direct deposit on your taxes from your 2018 or 2019 tax return, is possible they might do it via that mechanism, but I suspect given that you could have changed banks, it is more likely that it will be coming in the mail.
Also related to that, Donna has asked or has stated, my understanding that I believe that's the cash infusion payments to individuals, was an advance on future tax refunds.
I don't believe that's going to be the case. I think that this is supposed to be money that you're receiving and you're just able to spend. But this is a lot of information, and so I could have that wrong. And if I do, I'll have Mason clarify that on the website.
Thanks, Paul. And again, if I'm not capturing the essence of your question, please ask it again. Tom, I do see your question. I'm going to ask two others prior to that. Violetta asked regarding the $1,200 a month payment. She asks, is this for U.S. citizens only?
Yes, unfortunately, that payment is going to go only to U.S. citizens.
Okay, and then I'm going to go up to Ray, who asks, or who states, it's kind of a statement and a question. I would imagine the 2/3 payment comes without the tax liability, much like regular unemployment?
Your emergency paid leave is just like regular PTO time off. And so I believe that it will be calculated just as your paid time off compensation would be calculated.
Thanks, Paul. And then I want to get to Tom's question as well, who asked, I'm an S Corp with 4 employees, and am I able to get unemployment for those who have been laid off? Yes.
You have employees who would be eligible due to a salary reduction to file for unemployment.
Okay, and then I do have one other question, well, 2 more that I have, and then if they come in, I'll let you know if we have more. But the first one is, can you speak to evictions and foreclosures and how that's being handled during the current situation? Yeah, that's a really good question. So there in the CARES Act, there are a couple of different ways to answer this question, but within the CARES Act, there is a halt on evictions and foreclosures for all FHA-backed loans. So any property that has been funded by the federal government, they're going to be prohibited from evicting you. Separately, for those properties that don't fall into that bucket, the governor has issued an order that has directed banks and other lenders to work with landlords to prevent them from evicting anyone before April 30th. I suspect that will be extended. Now, with respect to the governor's order, that was let's use my departments to work with the business community to figure out how we're going to figure this out. There's no direct order that says you absolutely cannot do it. But that is the overall effort that's going on. If you're a tenant of a landlord at a house, let's say you live in a lockoff, and that particular landlord does not have an FHA loan, I would go and speak with your landlord as soon as possible, because banks have been directed not only through the governor, but through legislation that's left over from 2008 to work with those landlords who are in distress, because they rely on the rental income in order to make their mortgage payments. And so you need to work with your landlord, who then needs to work with their bank to figure out a way for the landlord to go ahead and be able to continue to make those mortgage payments or defer those mortgage payments in order to keep you in your house. But regardless of the situation you're in, it is better to be proactive and work with your landlord rather than just hide under your pillow and hope that it all works out. I represent a couple of landlords throughout the state, and my experience has been they fall largely within a couple buckets. Some are terrible people and are expecting payment on the first no matter what. Others are incredibly generous people, and they've already deferred rent for the next 2 months, recognizing that the economic realities of the situation.
The third bucket has been, well, tell me about what you've done to access all the available resources out there. So if it's a commercial situation, have you applied for a PPP loan for you and your business? And if it's a residential tenant, have you applied for unemployment? Have you received it? And if so, what's that amount? And let's find a proportionate way for you to pay me a little bit. So those are kind of the approaches I've seen landlords take.
Hey, Paul, thanks again. I just wanted to go back and revisit. I missed the mark a little bit on Tom's question, which I apologize for, Tom. He asks, can I, as the owner of an S-Corp, get unemployment?
Yeah, so you'll be deemed a self-employed person, and you are now eligible for unemployment. You weren't before. And I think that you fall into that bucket of people who may not be able to access the site until April 10th, but I would hop on today. There's obviously no harm in doing that, and see if that's up and running yet. I didn't check today, unfortunately, but yes, you will be eligible.
Awesome. I would encourage people to keep getting their questions in. I only have one more right off the cuff to ask. So if you do have any questions, please get them in right now. And as always, again, my email is in the answered question and answers throughout. It's also on the town website and on the invitation to this. So please email me if something additional comes up. I'm happy to try and get you an answer on it. The last question that I do have here is, does the federal legislation change my health care at all?
No, so it obviously changes some of the sick time that you're available to take, but there's no impact on the healthcare that you are going to receive. I say that with a caveat that now all COVID testing is supposed to be covered by a group health insurance plan. But I don't know that there's a whole lot of testing necessarily going on at the moment. But either way, if you do get tested, that is supposed to be covered by your health.
Thank you. And I have not received any more questions during that answer. If you have more materials to go over, that's great as well. But, I'd encourage people to ask their questions. I think this is a valuable resource and time. So no question is too small. Please ask if you have an inkling to. I'm going to give it just a minute or two more for questions. Paul, it looks like you are wrapping up a little bit. Is that correct? Just answering the remainder of the questions, or? Yeah, no, I mean, that's pretty much all I had. Obviously, things are changing in every aspect of life, including these stimulus efforts. And so eligibility and qualification and thresholds are being altered kind of on a regular basis. As various agencies within the federal government get their hands on it and provide their own spin and interpretation. And as new legislation comes down, I suspect that as federal legislation slows down, there will also be some more statewide efforts geared towards figuring out how they're going to specifically deal with some of these issues. Obviously, Colorado as a whole has a larger tourist economy. And so I think Colorado will have to figure out how they're going to deal with some of those unique issues. But the important thing, I think, is to the extent you have questions, feel free to email Mason. We can try and figure out an answer for you. I know that the town's trying to do what they can, but I think that we're all going to get through this. It's just going to take a group effort to make it happen. Thank you. Hey, Paul, thanks so much. Sorry, I'm, learning. So we did get a couple.
Awkward silences are what I live for, Mason. So thank you.
Yeah. You and me both. I'm good at providing them. So everybody on the call, you're welcome. A couple more questions did come in. Violetta wanted to ask, will legal U.S. residents, and I'm assuming non-citizens, receive any financial support?
That is a good question. I would have to look and see where legal residents fall within the legislation. I'm pretty sure it's U.S. citizens. And so I don't think legal permanent residents are going to be able to access those funds, but that is something that I can look at. And I will let Mason know.
Yep, and Violet, I did get your first email. If you would just send me another one with your second question, I'm trying really hard not to forget anybody, and that is really helpful for me. There is another question that came in, which is on the work-share program you talked about earlier from the state. What is the limit?
It is a 52-week period, and so the limit, I think the limit is, trying to think about what exactly the limit means. I think that they have to have dropped, at least had a 10% reduction in their work, and it might actually be 20%, but it's somewhere around there. So it doesn't have to be a huge drop, but I think that it has to be within that 10 to 20% range before you're eligible for the program.
Awesome. Yeah, and that's, I believe, the last question we had come in. Happy to wait a minute or two if you have the time, Paul, to see if anybody else is jumping in at the last second. Thank you to everybody who has been asking questions. It's a really great thing to have you as a resource, Paul, so I appreciate you coming on as well. We did get one other question as I was buying time by rambling. This is from Ray, who says, I think that is related to if you have to file a tax return regarding the $1,200. I know that was initially, Paul, but it doesn't sound like that's the case anymore. If you could speak to that.
Yeah, so that Ray is right. That was the initial mechanism by which these deposits were going to be made, but then it occurred to people that there are people who are on Social Security who have not filed a tax return for a year or several, and so they need to find a way to get those people money, so they will be eligible. Now, I should say, if you have had no income whatsoever, you're not going to be able to access unemployment or the $600. The threshold really is whether or not you've generated $2,500 in a quarter for the last year. And so if you meet that threshold, then you are eligible for unemployment generally, as well as the $600 funding from the federal government through July 31st. And just to help Mason with the rambling, for all employers out there, I really would think about getting my application in for the PPP. The risk in terms of the exposure you're giving your business is so low in terms of being able to pay employees to the extent that that's something that you're interested in doing. You can pay them for those 8 weeks, and that loan is forgiven. And banks are overwhelmed at the moment, but they're ready to help. I note being overwhelmed because this is a $350 billion program, which sounds like a lot of money. But there are hundreds of thousands of businesses across the country who are scrambling to get access to that money. And it's really, that money's not going to be there forever. It is not an endless bucket. There is some talk about it will be refilled at some point, but if I were a business, I would think about applying sooner rather than later. If you happen to be a seasonal business, like you if you're a fishing guide, for example, and you're a seasonal business, I think maybe that gets a little bit more tricky because you're not going to start having customers for another month or so. And so you really kind of got to gamble. Do I put in my application now and hope it takes a little while to get processed and then I'll get that funding right when I need it? Or do I wait until I really do need it and hope that there's still funding available?
Well, geez, of course, if you have additional information to share, Paul, we'd love to hear it. I haven't received any other questions during this time. So I also, actually, Mark just sent one in. He wants to know, if my employee gets unemployment, should I apply for a PPP to pay him also?
So you can rehire him. So he will have got unemployment because you have separated from that employee. Under the PPP, you are able to rehire that employee. So you will rehire him. Hopefully the rehire will occur along the same lines as you getting funding so that you can then pay that employee's salary for the next 8 weeks and have that loan forgiven. Obviously, once they get rehired, they will then be off unemployment. And so your PPP funds will be the only way in which they're getting paid.
Awesome. And again, that is the last question. Please get them in. And if you think of something later, please email me. Again, my email is all over the place, and I'll put it out on the chat at the end of this again. thank you, Paul, from all of us as a community. I think this has been very informative and helpful. The town and Paul may look at doing this again in the future, depending on the changes in legislation and new legislation that comes out. Paul didn't know that yet, but I just let him know. And yeah, I mean, here at the town, we're just trying to pass along information right now that we think is pertinent. We will do our best to keep you guys updated. Please call Town Hall or email any of us here if you need additional questions or have additional questions or need additional information. We're more than happy to either point you to the right resource or do some digging and find out an answer for you.
Thanks, Mason. I appreciate it. And before I take off, I just want to say thanks to Mason and Tina. I suspect the community knows this, but they've been, they and the entire town staff have just been working incredibly hard during this particular time to keep town running and address all the issues that we all have to address. And so I'm really grateful for the opportunity to be able to work with them. And I've been very impressed with the amount and the quality of work that they've been able to do.
Well, it's a team effort, and thank you, Paul, for your help as well. If you have any closing remarks, I'll let you have them, but when you are done, I will be ending the call. So again, I did type my email in the chat as well, so if you still need it, please look there.
Mason, I said one nice thing about you, and that's it for the month, so that's my closing remark.
Alrighty, well, we'll see everybody. Of course, Paul has to end it like that. At least you guys know I'm treated well here. Thanks so much for your time, everybody. Again, really appreciate your questions and hopping on. And please be in contact with us if you need anything else. Paul, thank you again, and we'll talk to you soon.
Thanks, everyone. Hang in there.